बिस्मिल्लाहिर्रहमानिर्रहीम। अस्सलाम वालेकुम फ्रेंड्स, उम्मीद करते हैं कि आप सब खैरियत से होंगे। फ्रेंड्स, आज के सेशन में हम डिस्कस करेंगे इंट्रोडक्शन टू बैलेंस शीट। तो वीडियो की तरफ बढ़ने से पहले हमारी आपसे रिक्वेस्ट है कि हमारे चैनल को सब्सक्राइब कर दें। चलिए बढ़ते हैं आज के सेशन की तरफ। नोट्स एंड कॉइन्स टुडे मेक अप just 3 out of every 100 pounds in the economy. The other 97 pounds exist in the accounting entries on the book of the commercial bank. That means a basic understanding of the accounting and balance sheets is essential in order to understand how money is created. There is no reason to be put off by the accounting terminology. If you have ever borrowed money from a friend and left a note on the fridge of remind you to repay them, then you have already done one half of the accounting necessary to understand banking. In short, a bank's balance sheet is the record of everything it owns, it owed or owes. The balance sheet comprises three distinct parts. Number one, assets. Number two, liabilities and shareholders' equity. Number one, हम डिस्कस करते हैं assets. On one side of the balance sheet are the assets. The assets includes everything that the bank owns or is owed, from the cash in its vaults to bank branch building in town centers. Through to government bonds and various financial products, loan made by the bank usually accounts for the largest portion of the bank's assets. Number two, हमारे पास आ जाता है liabilities. Liabilities are the simply things that the bank owes to other people, organizations, or the other banks. Contrary to the participations of the most of the public, when you as a bank customer debit physically cash into a bank, it becomes the property of the bank and you lose your legal ownership over it. Then therefore the money is your bank account does not represent money in the bank's safe. It simply represents the promises of the bank to repay you. Number three, equity. The final part of the balance sheet is the equity. Equity is simply the difference between assets and the liabilities, and represents that would be left over for the shareholders of the bank. If all the assets were sold and the proceeds used to settle the bank's liabilities, that is, pay off the creditors. Equity is calculated by subtracting liabilities from the assets. A positive net equity indicates that a bank's assets are worth more than its liabilities. On the other hand, a negative equity shows that its liabilities are worth more than its assets. तो फ्रेंड्स, ये था हमारा आज का सेशन। मिलते हैं नेक्स्ट वीडियो सेशन में। अल्लाह हाफिज़।